Welcome, everyone. It's Greg Schnell, and I am here with the first edition of Market Buzz. Thanks for taking the time to join me. We have lots to talk about every week, and what we wanted to do on the Market Buzz was cover off a little longer time frame on the markets. I'm not an intraday trader, so we're going to look mostly at weekly charts on this show. But I do want to cover off kind of the market situation as we go through, and then potentially look for trades and setups that we can use in the following weeks. And I just want to discuss that one of the big problems with when we look at the bull market is it's always uphill, and the issue with that is as we try to go forward, we're going to now from a low, we're going to have to get through some resistance. And so today I'm going to talk a little bit about why that resistance might be right here, right now. And then we're going to cover off the financials because JP Morgan's going to kick things off next week on Tuesday morning. So today for our agenda, we're going to talk about the buying on the major lows. So that was December the 26th. And now we've had a big rally, roughly 10% up. And so it's a little hard to add to positions here. And the financials have climbed back up to where the Fed day was. So we want to talk specifically about that on the charts. And then we're going to go just look at each at some of these charts, and you'll see they've been running for 10 days in a row. And normally when you're at the top of the Keltner channel on a daily chart or something like that, it's not usually the place to add to your position. So we're going to work with weekly charts, and hopefully that'll take us that'll give you some ideas for this for looking outward as next week approaches. Okay, I want to cover one thing off. So I think the market is going to be, I think where the problem is a lot of the indicators set up that we haven't seen these kind of lows since 2008. So lots of them make me worry that we're in a bigger downtrend, and so we need to be aware of that. But this was from Sentiment Trader, and Jason Gopfert does a great job on that website of keeping track of some statistical anomalies and that type of thing. So one of the things he said was this is only the second time that the ratio adjusted McClellan oscillator went from less than minus 95 to greater than positive 95 in 2 weeks. The other was back in 1962. Now, there were 3 other times it went from minus 80 to plus 80, and one of those coincided with March the 9th and June 2070. A year later, the S&P 500 was up 25%, 28%, and 50% respectively. So whether or not I think it's a long-term bull market, we still have to trade it as we go. And I couldn't be more hopeful that we're in this big giant bull market and this was the major low, but we won't know that. And so as we go, we have to trade it. And one of the things I want to talk about today is just why we might pause here. And so this is the 60-minute chart of the S&P, and this is the VIX up at the top here. And you can just see the VIX is kind of flattened out in this level as the market is flattened out. And almost every day we open or not every day, but we have quite a few days where we get this down open and then we try to rally back up. And normally in a bull market, it's not uncommon to open a little bit weak and then rally. Now, the real question is that what we're going to do, or are we going to start falling back off again? So we don't really know, and we need to just keep watching our trades. So on this chart, this is just the MACD of the S&P 500, and you can see it's bounced up and it's rolled over. Now, it's not falling, but it is down sloping. And then below it, I've just got a bunch of other markets I'm watching. So the NASDAQ, the Russell, and the TSX. And then here's natural gas and oil and gold. And this is the bond market, TLT. So this is price up, yields down. So in this case, we've been declining for about a week now, and it looks like we're trying to start our rally. And then we've got UUP, which just continues to roll over, and that tracks the US dollar. But when you just roll out this chart for 3 months, and that'll give you an idea, basically, since the October market top, we were rolling down, then we went sideways for most of November, and then December, we really fell. And right here in December is the the Fed day, and we were just below support. We came down into this Fed day early in the week, and then on the Fed day we broke down and we kept going, and then we fell almost another 5% or 7% after the Fed. And what we see right now is we've rallied back up to that level of the Fed, and we're this 2600 level by all accounts would be a great place to expect resistance to show up, just because it's at prior support. Now, when we look at the MACD, just very simply, and we're in volatile times because, you know, we've got a VIX up at 30, we're still sitting at 20, so the market's moving around quite a bit. But you can see when we draw trend lines on these momentum indicators and they start to break, it's a good place to be cautious. Now, we have this uptrend and we've just broken it, so it's a good place to be cautious. And we're also right at horizontal resistance. When we get into a situation like that, the problem we're going to have, and I just want to change this out to RSI, take this off. One of the problems we're going to have is as we approach this level, every technician is going to want to talk about selling the market off here. And here's a horizontal line. We'll just put it at 2600. And of course, we broke to new 52-week lows. That's not usually seen in an uptrend. And you can see that the 50-day moving average was resistance here, and now we're coming up to it, and we're also at this horizontal support and resistance level. So all of this adds up to a more difficult situation where if the market was going to roll over, you know, we've kind of had the classic oversold bounce, and the charts I had posted back in here about our current market situation. So this is the S&P daily, just zoomed in since last June. But you can see that we got to the 200-day and we kept hitting resistance and couldn't stay up there. And then we fell down. When we went through support, it was meaningful. And so this was, I think I posted this chart almost 2 weeks ago. But suggesting that 2603, the 2600 level would be a problem, and the 2575 was a fib level, and it was also right when we had the Fed meeting. So lots of reasons for 2575 and 2600 to cause problems. Now, if we look back and look at 2008, what we see, and it doesn't look very meaningful here because here's this big picture. We broke down, we came down, and we got up to the 50-day, and then we just kept struggling below the 50-day. So the next 2 months went on basically between the lows and the 50-day, and we just oscillated back and forth. That's where we're at. We're sitting here where we've made a market top. We've struggled to get through the 200-day move, or 200-day moving average and the 50-day, and now the 50-days kind of capped us out. So again, we're back in 2008, 2009. We broke through 52-week lows, came down, rallied back up, and got to the 50-day after a pretty good rally. I mean, this was 10% here. And then we continued to struggle. So now the question is, we're right here, and what do we want to do? And I think, you know, from anybody's management perspective, you know, when you get right up against resistance, we have to be very, very careful. So if you have profits in your trade, you have to decide how you want to protect them. Do you want to use options? What do you want to do? Now, here's the upslope on the PPO, and it's already broken. The upslope on price has not broken yet, but you know, if that's going to break, that's going to be a bigger deal. I think the big issue is JP Morgan reports on Thursday, and I don't think the numbers are going to be half bad. And so we're going to get some rally into earnings. I could be all wrong, but that's more what I'm expecting, is that we get an earnings rally. So what I want to talk about today is just looking specifically at the banks. And when we look at the banks, I have an ETF set up, and so I've set up a whole bunch of, not ETFs, a whole bunch of chart lists that are set up as individual business industries. And in this case, I've got banks and financials. And then I also made one for banks and financials weekly, so we can look at them both ways. But if we just take a chart, and I'm just looking through here, here's JP Morgan. And you could see, pretty much looks like the S&P 500. Where did it stall? Right at former resistance. It's been pulling back for 3 or 4 days. And now they're about to announce their earnings. Now, if we go to a weekly chart of that, when we look at this, one thing that's very important, and if you have read my work or Greg Morris's work or whatever, we talk a lot about watching for a change in momentum. And so I like to just draw these trend lines out. And the longer the trend line, the better. I don't really want a 1 month or a 2 month trend line. I want something that's at least 4 months. And in this particular case, we have that sitting here, just something like that. We'll zoom in on that in a little bit. But what we're looking for is the whole market to start to turn up. And you can see our full stochastic is moving back above 20 after being down there twice. Now, in the last, 5 years, we've barely been down here twice. And when we were, it was a pretty nice place to get on board, to get on a rally. Now, again, the big issue was all of that took place above the 40-week moving average, and now we're below it. Back in 2014, 2015, and into the final low in 2016, we had the same base being built. JP Morgan dipped down, didn't quite, back in here in mid 2015, it made a new 52-week low, and then it rallied right out of that hole and ended up rolling back over and retesting that. We don't know that, but what we do know is we're down at one of the lowest levels that this PPO has been in 5 years. So in terms of momentum, we're pretty much washed out. I think if we looked at this chart and found that we could buy at the same level that we were at, I think what we want to do, in terms of momentum, that we could buy at the same level is, we want to try and stay with the trade, because if you can buy JP Morgan at $70 or $90 and it's on its way to whatever, 200, that's kind of where we want to enter. The problem is each week we're going to have these oscillations. So I want to look in general at the banks and just see what they're looking like. And again, JP Morgan is going to be the big benchmark. So we have to worry a little bit about the big picture, where everybody wants to sell. And we have to worry a little bit about the individual companies, because in general, if the mood is sell the rallies, we're probably already there, and we need to be careful that we're not stuck below the 10-week moving average and this thing just rolls over. So I would say that what we want to talk about today, or what I want to talk about today, is working through the banks and just getting a feel for how they look, and then being ready to take advantage of that. So when we look at the scooter ranking, this basically, this tells us which stocks have the strongest price action. And so if we go to Banco Santander out of Brazil, this is making new 52-week highs, and it's been really outperforming. So remember, the overall market was like this in the US, and now here we have Banco Santander got up to resistance and has literally vaulted through. So this Brazilian market is starting to look very buoyant. And some of these other foreign banks are as well. And one of the things that also happens is when you have a US dollar falling, buying foreign companies on the US stock exchange can still help you, because then you get the gain not only from the currency but from the company. So we want to look around, and we can see that this ICICI Bank is just about ready to break out to new 52-week highs. It looks pretty good. Now, in general, all the banks don't look that good. There's only 5 banks with a scooter better than 79. And we have to talk a little bit about what the scooter does. The scooter uses 6 different measurements and tries to say, how good is this price action on this stock? And it compares it to things like the 200-day moving average, the rate of change, those types of indicators, and then gets a score for each stock and then ranks all the scores, much like a sports table where the top team would be, well above the 200-day moving average, and obviously the bottom team is losing a lot of games and is way below its 200-day moving average, much like a sports team where they rank on the system. So we're looking for strong stocks, and again, a few of the what seems to be happening is a lot of the foreign names are starting to pop to the top, and so that might give us a clue that perhaps some of the better opportunities are going to be offshore. So here's Royal Bank, and this is Canada's largest bank, and you can see that it's moved through its 10-week moving average and now is trying to come up against the 40-week. But all of the things we'd like to look for, this downtrend in relative strength that's been going on for a year, part of that's currency, looks like it's starting to change and it's outperforming. The full stochastic is just turning up on a weekly, and that would be very helpful. When we go down here, it's barely a 4-month downtrend. So I'm not really that happy with that trend line. I want to use a longer trend line like this. And when that starts to break out, that's probably a better place for us to get on board just in general. So the banks, again, they took almost, 6 months to a year to get going out of this low, and then that was really the kind of main breakout that you'd have been happy with. Again, this occurred closer to the 40-week moving average, but from these major lows, a lot of this is starting to perk up, and it's not uncommon that the emerging markets and things like that actually start a rally where the US dollar pulls back, and that gives strength to emerging markets. And as the emerging markets get going, they help bring the bull market along. Okay. So with that, I want to go down to the other end of the scale. So one of the things you'll find is you've got these banks that are really, really poor. And here's Goldman Sachs down here. And obviously we know that they've had some trouble with the Malaysian situation. And this is trying to get back up to the 50-day moving average. And even on this one, there's a 2-year downtrend on the moving average, or on the momentum. And again, momentum has to improve before the price improves. So just like a basketball, when it rolls over at the top, so you bounce a ball, and as it comes up, it actually stops going up before it starts going down. And on the bottom, it might make a V bottom, but the real question is usually it makes a bounce up and then a higher low, and then it takes off from there. So much like this case, this higher low. Now, when we look at these charts, again, if we just draw a trend line across, we could have drawn one here, and it ended up that you wanted this one, which is the case with a higher low. So we wouldn't mind waiting for the higher lows here, trying to catch them just because they're turning up. This gives us little short-term rallies, but not so much big picture rallies. I think Goldman Sachs will be a hard one to own here. I think you might get some sort of a rally, and then we'll find out how far it goes. But again, the 200 is support, maybe 210, and we're sitting at 175. It wouldn't be my favorite to jump into that stock just yet, because the momentum hasn't turned up. And when it does, then you're probably going to get an extreme rally, because it is extremely oversold. If we look at Morgan Stanley, what we see here, this downtrend has been very civil. There hasn't been any big drops like Goldman Sachs, but it still broke to new 52-week lows. And look at this PPO structure here. There's a 1-year downtrend that we can look at that, to me, is much more indicative of where we could get on board. So a break of this trend line, and I want to start getting involved. Now look at how quiet the volume has been. It's about normal even during the bull market. I think the big issue, we don't have any big kind of screaming buying showing up like we did back here in 2016. And so you had the rally off the low, and this bank didn't really start the rally. It came down, but that second push was a really nice place to get on board. And again, you can figure out where to draw your trend lines on here. In this particular case, it might have been better like this, or it might have been like this, and looking down in here in early April. So either way, as we're going through these banks, the big thing we want to be aware of is just, is there momentum starting to turn up? And so one of the things we can quickly scan for is, what's the PPO doing? Have we got any PPO crosses? And that's what I want to talk about now. So we don't have to be very difficult. I have a favorites list of banks, and whatever your list is going to be called, you would go down here and you would select it. And so obviously Greg has a lot of lists, but the big issue is, whether we scan on financials or copper miners or whatever, we can actually specifically ask for one of those lists, and then you would hit add. I've already put it up here, so here's my favorites list. And we can do two things. We can look for a PPO crossing above 0. We can look for a full stochastic starting to turn up. The full stochastic is going to be faster than the weekly PPO. And so at least being aware of that turn up is important. So anyway, we run this scan, and when we get this scan, we get 15 results. Now, I know that the number of stocks in that chart list, the bank's chart list here, has 73 charts in it. And you could, it's not that hard to figure out. You can do it from your membership tab or whatever. So why don't I go there? So from the dashboard here, when you scroll down, and sorry for the scrolling, but I'm going to quickly push down here to 600. And it says I have 73 charts in this banking group. Okay, so we know there's 73. We just ran the scan, and the scan results came back with 15. So only 20% of the stocks even have a PPO crossing up so far. Now, we can replace an existing chart list with this and work with it. The one thing that I would suggest we do here is put them in your scooter ranking so that you can at least go and look to see what's going on. And let me just, I shouldn't have done merge. I should have done, not what I wanted. There we go. And we want to replace an existing chart list, and I just have a whole bunch that are set up that I can dump things into. I have like 10 or 20, and you can call them whatever you want. But the big thing we want to do is go and look and then just say, okay, in the last 3 months, so while the US market was going down, how did these stocks respond? And we can sort them by percentage change. And you can see, these foreign banks have been doing a little bit better than the US banks. Now, when we go through and look at these, again, it's not that hard. We can go to 10 per page. It's automatically going to set it up as my default chart list, and I'm just going to click on one, and I'm going to change it to weekly because we just want to look big picture. And then at the very end, you just go down and apply this style to all, and that's going to create a chart list that we can just get it in the viewpoint we want. So I just used one of my quick chart styles, and if you don't have any set up, you could just go down here and pick any of the predefined scan or predefined settings for charting styles and pick one that's weekly that you like. Anyway, so you can see this Brazilian bank breaking out to new highs here. PPO is turning up and moving up higher. Full stochastic is soaring. Relative strength is breaking out to new highs. And just go back and look, and you can see when the relative strength started to break out in 2016, that was a one-year trend that this stock made breaking out. So it's a good time to get on board when you see, this new 52-week high on relative strength. That's not a bad place to look. Okay, from that, now we can just go view all, and I just want to quickly scroll through these here. But looking at these charts in general, they're making higher highs and higher lows. They're trying to break out to new 52-week highs. And if you're a bottom fisher, the strongest stocks in the group are not going to be those stocks. So you have to find the style you like. And if you like to buy 52-week high breakouts, then these stocks are setting up nicely. If you want to buy stocks just turning up off the low, some of these are setting up a little better. So this one, and I don't even know this DBS group holdings, but what you can see here is this downtrend has been almost 9 months or 10 months. The PPO is just starting to turn up, and price looks like it's making a nice base here and wants to start turning higher. Full stochastic is just moving above 50, and I'm sure on a daily chart it looks extended because it's at new 4-week highs. But if you're a big picture investor on a weekly chart, then this is going to be something you'd like to look for. And again, here's a big downtrend in PPO momentum. And if this starts to break out above here, I'd like to get it. So much like in 2016. And here's China Construction Bank. And a lot of the Chinese stocks are starting to look better now. And this has made a higher low while price made a similar low. So, as this starts to turn up here, this is very bullish. They got the full stochastic bounce around 50. And you can see that that's a bullish trait. And conversely, when it gets rejected around 50, that's usually a bearish trait. So here we have support, and it looks like it wants to turn higher. Banco Santander, nice downtrend here, breaking. Same thing on the momentum lines. You can draw them in here, and you can see that this downtrend is breaking. So just very quickly, while we've got a market trying to set up, maybe the US banks aren't starting to move yet, but maybe it's the foreign banks that are going to lead this out of here. And here's the Australian bank, and there's a big downtrend going on here. And this momentum is starting to turn up. So I kind of like the chart. I like the full stochastic making a divergent low. So this low is higher than this low. And this price low is lower than this. So we have a lower low in price and a higher low on momentum, or on the full stochastic. So this is pretty bullish. We have a downtrend in relative strength that's being broken. And if we draw a trend line down here, we're very close to breaking through that trend line. Might not be there yet, but we've got this is our first week that we got a move above zero. Now, again, on your scan, you don't have to be very detailed. I just said that the PPO histogram, which is from the drop-down menu down here, just has to be greater than zero. And what does that mean? That means that the bump here just has to be starting to push to the higher side above zero. And so that's the easy way of looking for a cross. But if I say above zero, it'll find something that was above, that crossed a week or two ago or whatever. It won't have to be just this week. Or if I say a PPO cross, it has to find it on that week. Hopefully that makes sense. This is Templeton, and what you see here is same thing going on, where we're trying to make a higher low in momentum and a lower low in price. This hasn't, this is just starting to turn here, so we have to keep watching it. But again, we're below both moving averages, and quite frankly, it looks like the foreign markets are doing better than the US banks right now. So those might be the place to start looking, and eventually you could rotate back to the US. Here's HSBC with a 6% yield. I agree it's still downtrending, but the momentum is trying to change here. The PPO is going higher, and we're starting to see the full stochastic change. So hopefully I've given you an idea of some of the things we want to look for, and why you would want to have these industry group lists all set up. Once you have them set up, then you can work with them to rally. So thanks for taking the time to join me this week. Hopefully you'll find lots of exciting ideas on the show every week. I'm going to do it Wednesdays and Friday mornings, and from there, hopefully we'll have some good trade setups for longer term trades. Thanks again. Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under indicators, select volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click update, and that will give you this nice little line on here so you can see if it's above or below average volume.